over the management for the presentation and the Q&A later. Thank you.
Good afternoon, friends. Thank you for all dialing in to Jyothy Labs conference call results. So before we talk about the results and the brand performance for the quarter gone by, we'll briefly update you on the current market scenario. So overall, consumer sentiments have improved with economy and life almost back to normal. We Indians and our business fundamentals have really shown immense resilience. And the way we look at it, businesses have been either aligned for new normal or a new abnormal. In terms of consumer trends, our ground level assessments indicate that we are at crossroads and underlying consumption trends are yet to settle. Second, the trust of the brands have become very important for consumers, more so during the ongoing pandemic times. Third, in terms of the specific to channels, general trade is doing well as consumers are preferring to buy at neighborhood kirana stores or on e-commerce websites. While large format stores of modern trade and canteen store departments still are continuing to face operational issues. So they are either operating for restrictive hours and we have seen reduced footfalls also there. So there's been a shift of consumer shopping habits during this pandemic, and general trade and e-commerce have become their channel preference. In terms of rural and urban trends, rural demand has been inching superior than urban demand on back of good monsoons and government support. Government interventions have been there to provide good social security measures, which have really helped the increased consumption of various goods in the rural markets. Now talking specifically about Jyothy Labs, despite the ongoing challenges, we have taken this crisis as an opportunity and recommitted ourselves and delivered a resilient performance. The way we look at our business, the way we are aligned, our portfolio plus our execution and keeping a strict financial prudence, I think have been behind the growth what we have been missing now. So portfolio we have aligned and leveraging on our core essential and hygiene portfolio. Execution and planning has been key for us, and we have been quite proactive in using data analytics, help of technology, and also tactical marketing, which have helped us in growing all our brands. And while all this thing is good, also keeping a strict financial prudence and focusing on all key financial parameters at all times to enhance shareholder value. In terms of a portfolio, again, just the core day-to-day essential and hygiene portfolio across our dishwash, personal care, detergent, HI and toilet cleaner and floor cleaner, they have helped us in doing a good growth across the brands. Now, backed by the strength of the portfolio, we have focused on execution, and execution has been quite on a laser-focused basis, and we have redesigned our priorities, and we have seen good results from it. The foremost first comes with the go-to-market. We have enhanced the depth of distribution in rural areas. We have been focusing on low unit packs across brands, 5 rupees and 10 rupees across markets, and also our growth and focus on e-commerce platform has been good. We've grown in this quarter also 1.7x of our previous year numbers. So e-commerce is gaining share in our portfolio.
Sir, sorry to interrupt. Sir, I would request you to please come a little closer to the phone. You're sounding too loud.
Okay. Adding or continuing our efforts on focus on innovation and new launches, this quarter we had launched Exo BioFresh, 100% organic vegetable and fruit cleaner, which we have launched in Kerala. Also to ensure that the timely supply of goods is there across India, production at all our 27 factories have been very seamless, And in addition, we have been able to implement several rationalization programs and to improve the efficiency and productivity. Media activities, we have decided to do more focused media spends and increase to support our full business potential. We are present in large categories and a strong pan-India distribution. Hence, with increased media spend, we know our brands will see a good growth. Finally, most important, people. And having a motivated workforce is always important, and we believe, especially in this environment where everybody is working on a virtual mode, we had done across the board salary increments and incentive payouts, which has further boosted the morale of the entire organization. In terms of the financial prudence, proactive measures on cost management and alignment within all business teams have ensured supplies across channels across India. And also overall, all these results, all these steps have significant improvement in our net working capital days to 17 days now. And with better cash flow management, working capital, for the first time, our Jyothy Labs standalone balance sheet is on net cash surplus as of September 30th. And even at consolidated levels, our debt, which includes both the short-term working capital, is only at 40 crores. So we are happy that our Q2 numbers have been better than Q1 on all the parameters. And the entire sales volume, EBITDA, PAT, free cash flows, everything has been good. In terms of the results, our net sales revenue is up by 6.2%. FMCG business is up by 7.6% and volume by 8.5%. Gross margins have marginally increased to 47.7%. Media spends have been increased by 6.4%, keeping in line with the sales growth. Operating EBITDA has improved to 17.3% and increased by 11.1%. And PAT has been at 60 crores and increased by 12.2%. Similarly, for the half year, revenue is up by 4.5%. Gross margins have broadly remained flat. EBITDA has increased by 13.6%, and for the half year, our PAT is 110 crores and increased by 21%. With respect to the category-wise revenue, fabric care sales declined by 11%, 11.7%. And just to spend a minute on that, in our portfolio of fabric care, it's equally divided between main wash and post-wash. Post-wash, as all of you would know, is fabric whitener, Ujala fabric whitener and Crisp and Shine. Now, Ujala fabric whitener broadly has come back to the pre-COVID levels, while Crisp and Shine may take a quarter or so. So the post-wash portfolio has come more or less at the same level. In terms of the main wash, because the operations are still restricted at modern trade and CSD, and we have Henko and all, which are more premium packs, so we have seen a decline. But again, it depends on how modern trade and CSD business normalizes in the coming months. We see that channel also coming back to normal. Also, third part to the fabric care is there's been softer raw material prices, and we have also taken some price offs on select SKUs. That too has also impacted the top line. So on the other brands, which is dishwash, has seen increased emphasis on hygiene and focus on our distribution has helped us to grow 23.6%. HI, which is the mini season for this quarter, as well as consumers adopting a more cautious and a preventive approach to health, has grown by 22%. Personal care, primarily a neem-based Margo portfolio of soaps, hand wash, face wash, sanitizer has grown by 14.5%. In all, the total business has grown by 7.6%. Laundry business, which is 1.5 to 2% of our top line, very small business, that has declined as it is more retail stores across metros, which is Delhi, Bombay, Bangalore, Pune. So that had seen a decline, and which we think as things normalize will also be coming back to normal. Next slide is on a snapshot of our financial performance and key financial ratios. To sum it up, the way we look at it is it's a good all-round performance on all profit, loss and balance sheet matrices. A quick understanding on the next slide is our EBITDA movement from last year to this year. Last year our EBITDA was 16.6 for this quarter. There's been a marginal saving in gross margin, and the EBITDA for this quarter stands at 17.3, and for the half year stands at 17.5. In terms of the key balance sheet matrices, working capital days have come down. There's been it's come down from 23 days to 17 days. March is an aberration because everything had got dislocated, and therefore from last year to this year there's been a good considerable improvement. Similarly, on the net debt, on the consolidated basis, our net debt is now at 0.04. We'll now move on to the brand performances and initiatives. Our category-wise business share has slightly been changed. Now fabric care is 34%, dishwash is 38%, HI and personal care are 12% each. So we'll begin with each of the category-wise performances. On fabric care, Ujala Fabric Whitener, where we are the market leader, we continue to increase our retail visibility and also showcasing the benefit of using Ujala Fabric Whitener for post-wash, post-detergent wash. That has started giving good results. And as we are seeing the out-of-home activities getting normalized, our sales have reached to pre-COVID levels consistently now. In terms of Crisp and Shine, this is more of a specialty post-wash product. Here, we still have to see the normalizing trends coming in, and we believe in the next 1 to 2 quarters, once schools and offices functioning becomes complete normal, we would see the growth again coming back. However, it's a unique product, and we own this category, so we have launched a new TVC with the South superstar Nayanthara, and we continue to give importance and seeing the potential of this brand. Similarly, for Ujala IDD, which is currently being only focused in Kerala, we have seen good GT sales growth in Kerala, and we believe as modern trade and CSD stores also getting normalized, this overall growth numbers will be far better in coming months and quarters. On Henko, we are again focusing more on general trade as MT-CSD has yet to stabilize. And again, we have been focusing on a lot of retail visibility and drive in the focus markets, and also initiating a pan-India national rollout with TV campaigns and spends being done on this. In terms of the dishwashing is 38% of our total business. There is a renewed focus on hygiene and also backed by our focused distribution. Both EXO and Prill continue to do well. Also, consumer habits of staying at home has increased consumption of food and at home and resulting in more utensils being washed. So that's one of the reasons also where brands like ours are doing well. And smaller packs is again more of a strategy for us, which has enabled us to unlock new households in rural markets and propelling a good growth trajectory. Again, to catch hold of newer consumers in the dishwash, as the category is less penetrated, we've been focusing on marketing for both EXO and Prill on digital and social media. And digital is enabling us to experiment with different content, messages and mediums. So that's been a good progress for us. Similarly, we've been focusing on consumer awareness on Exo Gel. As you recall, we launched it a couple of quarters back. It has the power of bar and shine of a liquid. So we have been doing at various retail touch points, promoter-led campaigns. In terms of our innovations and product launches to meet consumer demand, and in the past couple of quarters, we launched Margo hand wash, face wash, sanitizer. In the same trend, we saw a demand for vegetable cleaner. So currently, we have launched this thing only in Kerala, and based on the feedback, then we will decide on the next steps. So that's the launch which we have done in this quarter, and we think it's an important to launch with the Exo. Our brand stands for Exo Family, a healthy family, and it fits pretty well with the overall strengthening the Exo brand. Household insecticide, we've seen a healthy growth in sales of coils and liquid vaporizers and coffee machines, primarily because the mini season has done well and consumers are adopting more cautious approach to health. We have been focusing on for continuing to spend on TV media and additional emphasis on digital campaign, which is helping us to get good offtakes in some of the key states. The activities on digital campaign has been on rise. The fourth large category for us is personal care, where it's primarily Margo franchise, and which is again been doing well. Here also again we are investing on digital medium to reach out to consumers in addition to our regular TVCs. T-Shine floor cleaner, which we launched in the last quarter. We've got good response because it's been again a unique product offering with 100% organic compound base. And given the positive feedback, we are supporting the brand with now new TVC campaign featuring Southern superstar Navya Nair, and that is again giving good optics. So going forward, we are quite optimistic on our business prospects. While business environment and consumer sentiments still remain volatile, we will continue to focus on our core essential and hygiene portfolio, and we aim to deliver steady, sustainable, profitable volume-led growth. And how do we plan to do that? Our broader strategy is to make use of the full business potential of all the business categories in which we are present, which are large and growing categories, and more importantly, support them with additional media support and focusing on geographical expansion. Finally, softer input prices should remain. If they remain in that, it will support on the gross margins, and in addition to that, several cost optimization measures and strict control on the business hygiene will help us in our healthy cash flow management. With that, I'll finish my presentation, and we are happy to answer any questions and any clarifications you need. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ashwini Agarwal from Ashmore Investment Management. Please go ahead.
Hi Sanjay and team. Congratulations for a good quarter in a challenging time. So just wanted to get your sense on how should we think about the rest of the 6 months. I mean, you've delivered an EBITDA margin ahead of last year and ahead of your formal guidance, despite spending 5 crores on the Prime Minister Relief Fund. and you're seeing an improvement in gross margin, which I suppose is a function of those price increases that you've taken. Also, a comment on the working capital savings. Your working capital days are probably down to the lowest ever that we've seen. So is the gross margin improvement, EBITDA margin improvement, working capital days improvement, are these things likely to stick, or are you likely to invest some of these gains back into growing the business?
Yeah, thanks, Ashwini. Good question. And see, if we look at it from a 3 to 6 months, our growth will be steady. Now, what will and how would be, what numbers it would be, I think it will be difficult to predict those numbers sitting now because we are still not out of the woods. So, however, if I look at it from most of the categories, which is your dishwash, HI, personal care, I think we'll have a sustainable growth, what we have seen now. Fabric care is one category which in Q1 we were down -23. In Q2 we are -11. And from the trends we are seeing a good improvement month on month on that. So that is the color on the top line. Mm-hmm. In terms of the EBITDA, see, one is the softer raw material prices has helped. However, at one side of it, certain brands, fabric care, dishwash, the prices have been soft, while in personal care, PFAD, which is for soaps, the prices have gone up. So broadly, if I look at it, overall portfolio gross margin should remain there where they have been. In terms of the EBITDA, yes, we have, for the half year, we have tracked it around 17.5%, and that's broadly coming in from very sharp execution and keeping a good business hygiene. Going forward, in this quarter also we had seen, and in the past also we had seen, and we had called out in the past analyst call, that whenever we have been spending, we still need to spend much more on media than what we had been spending. I think there we have always figured out our ROI or investments on media has always been better. So as of now, we are still keeping our guidance of 15 to 16%. And since we are seeing that spending sentiment has improved across most of the categories and our distribution has become far more digital and technology and all that, we would believe any further investment on our brands will give us much better results. So we'll still keep our guidance of 15-16% and we'll keep that buffer with us for any tactical strategic marketing which we should do to grow the brands for long term. In terms of your last question on working capital, now yes, we are at 17 days in September. We would call it at around 20 odd days, 20-21 days as a metrics to keep for long term, because this quarter, because CSD sales were lesser and therefore the receivables generally for GT is always on cash, so CSD and modern trade business is down, so receivables are lesser than what we had seen the last year. So 17 is a good number, what we are happy with it, but on a consistent basis, maybe we'll be at around 20-21 days.
Got it. Okay. And one quick comment on, the HI business. So obviously, there's been some amount of consumer focus. There's also been fewer imports of the agarbattis laced with insecticides and crackdown on that. How do you see the next 6 months evolving? I mean, what are you seeing in the marketplace in terms of demand, in terms of spurious product or those agarbattis coming back, etc., etc.? Okay.
So HI again is a category which in the last many years things have been very volatile. One, for the first half of the year, the season had come on time and it remained, and therefore all of us seen a good growth. For now also, earlier, see, this is one category which is more purpose driven. If there is an insect bite, mosquito bite is when you will generally go and buy a product. But right now, nobody would want to even visit hospitals, then even getting admitted. So in this scenario, the awareness about using a mosquito repellent is far higher. You spoke about incense sticks. The spurious ones which were active year back, they have come down again because it's difficult to operate. The smaller guys have not been able to operate, and government has also done a lot of activities to stop them because it has ill or negative health impact. So we are seeing HI as a category is doing well, and more so for us, our focus is on the liquid side of it. That is where our media spends have been, and given the unique product offerings, the first automatic machine what we have, we will be focusing more on the liquid side of it.
Last question on the insecticide HI. What's the breakup between incense sticks and the liquid? The coils and the liquid, sorry.
So for us, it's been around coils is around 65 and liquid is around 35, 70-30. While we would want to take it up to much better on liquid side of it.
Okay. Thank you so much, Sanjay. All the best.
Thanks, Ashwin.
Thank you. The next question is from the line of Prakash Kapadia from Anived Portfolio Managers Private Limited. Please go ahead.
Yeah, thanks for taking my question. I have two questions. If I look at the operating cash flow, that has been a substantial improvement for the half year. So if you could, give us some insights as to what has led to this and how much of this improvement is sustainable. And secondly, all of us are hearing about the rural growth being much better than urban. So any product categories now we are seeing a structural headroom to grow, or consumer changing habits in our portfolio, especially in the rural segment. If you give some insight, that'll be helpful.
Yeah. So Prakash, on the cash flow, as we said, the profit has gone up from on a half yearly basis from 100 crores to 130 crores PBT. So that is one increase. Second is the receivables have been broadly the same, and the trade payables have increased. To that extent, our cash flow management has been good. So we think the cash flow what we have, the cash generated is more on a sustainable basis. As I said, working capital may again go back to 20-21 days. But overall, the cash flows way we are seeing, our distributor stocks have been at around 2 to 2.5 weeks. All that will remain on a sustainable basis. Second, in terms of the rural demand, broadly our portfolio is 40% rural and 60% urban. And some of the brands what we have like Ujala and Maxo and Exo, we have a good penetration in the rural market, and which we think will give us good results. And we are also focusing a lot of addition of sub-stockists in rural market, van coverage. And I mean, nobody would have expected at this point in time last year when everybody was focusing more on urban, and we all were saying urban is say 1.3x of rural growth, and now we are seeing a reverse of that. So it is a function and which we think the demand what we are seeing in rural, yes, it should sustain for long term. But given the measures government has taken, which are very excellent measures across the board, liquidity management, we believe that it should remain. But yes, it is anybody's guess that the demand in rural also need to sustain over a longer period of time.
And any insight on consumer habits or the hygiene factor coming in rural is more accepted given these times, and some of these can lead to higher growth or longer term growth for us, some of our categories.
Yeah, Prakash. So even rural, when there's also an upgrade in rural India. So they also are watching TV and reading all the mediums to understand, the Swachh Bharat, and nobody wants to fall sick. So there is an element of they want to see why all the low unit packs are picking up, because first time they are also buying a 5 rupee, 10 rupee Exo or a Henko or a Margo to use that. And it's again an aspirational thing that they also want to use better products when they have money on hand. Monsoons have been good. Government is taking care of a lot of their food requirements. So incrementally, there is an acceleration of these discretionary products for them in their personal lives.
That is it. Thank you. All the best.
Thanks, Prakash.
Thank you. The next question is from the line of Percy Panthaki from IIFL Securities. Please go ahead.
Hi, good evening, team. My first question is on the dishwashing segment, where the growth is in excess of 20%. So just wanted to understand what is driving this growth, and is this a sustainable kind of growth?
Yeah, Percy. So, see, for us, we have very strong market share in both EXO and Prill. And because both the products have a unique offerings in terms of EXO being the first antibacterial and Prill with, again, the first liquid which was launched long time back, and now with Prill Tamarind. So one is the product offering is unique and consumers find much better value in using our products. Second is the distribution. Down south, we have a very high market share. We have to increase our distribution more in the rest of India and primarily in West and North. So that is again helping us in making it more of a focused brand for all our sales distribution. And last but not the least, any one of us could not have done it. The focus on hygiene has come at the forefront for everybody. And the most of the dishwashing in large part of India is still done by ash and the conventional method. So using of a bar and has been predominantly the key reason for the growth which we are seeing, and the category is doing well, and we are also doing better in this thing. So it is a sustainable growth what we believe in dishwashing at least.
So basically, the category growth is also similar to the kind of growth you have reported?
So we will not know what the category growth would be. I think what we believe we must have gained market share in this category.
Okay. So second question is on household insecticides. Despite a good top line performance and also the fact that 30-35% of the sales now actually comes from liquid, we still have a loss in this segment. So what's the long-term plan? I mean, what's the growth to profitability? Unless we get a 10% kind of margin at least here, I mean, in any FMCG category, why should we even consider being in the category?
Yeah, so I agree with you, Percy. We also would want to increase our liquid share much more than where we are, and all our efforts have given results in the last couple of quarters. If we exclude the media spend on the EBIT which you are seeing in the results, we are very much positive. So if you exclude advertisement, we are positive, and it is again an investment we need to do for a couple of quarters, and you will see maybe next few quarters that HI, including advertisement costs, will also become positive from the EBIT perspective.
But is the ad spend like materially above what the normal level should be? Otherwise, I mean, it makes no sense to deduct it unless that is the case.
So that's right. There is a disproportionate more investment needs to be done to get our liquid share increased in the overall portfolio.
Right. And last question, if I may be permitted, see your Q4 last year, there was a substantial decline in the sales. So Q4 this year, how do we look at growth? Should we be looking at 2-year CAGR for Q4, and would you say that the 2-year CAGR would be similar to the kind of 2-year CAGR we are clocking right now?
Percy, I think we'll take one quarter at a time, and yes, Q4 will have a higher growth because the base numbers had moved. So we'll have to take some time to decide how the Q4 will go, and it will be definitely be much better than what we had seen because of the base effect. And yes, one can easily take 2-year CAGR number to decide on the Q4 performance when we reach there.
Right. That's all from me. All the best.
Thanks, Percy.
Thank you. The next question is from the line of Shantanu Basu from SMIFS. Please go ahead.
Hello, good evening. Well, I want to know the percentage of sales that was generated from your Kirana stores, e-commerce channel, modern trade, and CSD.
Right. So, modern trade, e-commerce, CSD has been broadly 20% of the business, and the general trade, which is the Kirana stores, neighborhood stores, is around 80%. So it's 80-20.
Okay, and how much was e-commerce and modern trade, the breakup?
Yeah, so e-commerce broadly has been around 2% for us in the past, and it has been accelerating well, and now it is around 3% of our total portfolio.
Okay, and modern trade?
Around 7-8%.
Okay, thank you. Thank you very much.
Thank you. The next question is from the line of Simran from SMC Global Securities Limited. Please go ahead.
Yeah. Thank you for giving me the opportunity. First of all, congratulations for the very good results to the management. Sir, I have a couple of questions to ask. First of all, I want to ask that can you give any operating margin guidance for next 6 months in the EBITDA side? And secondly, what is the top line from the CSD, and how you see the situation in the CSD going forward, and sir, how you see the trend in the urban areas, means demand in the urban area, because right now we all are studying that rural India is outperforming at their level best. And sir, my last question is that that the MD of a company appears less on the TV for the interviews. Any specific reason for that?
Okay, so a couple of questions. One, our operating margin or EBITDA guidance for the remaining half of the year. We have always given a guidance for the full year, and we believe we should be in the range of 15 to 16%. Second is CSD business has contributed around 8 to 10% of our total top line. Third, and which has seen decline for reasons which all of us know. Urban demand has been. It's not that the urban demand has broken. It is that currently rural is doing better than the urban, and for us, rural is 40%, urban is 60%, and so rural LUPs are growing. It's on a smaller base, so the growth seems to be much higher. Urban metros and all where we all live, it's seeing people are buying more larger packs or family packs, what we call it, because consumers still prefer to avoid going out much. So both of the categories are growing well. That's how you see the numbers of all the companies doing well. But in terms of relative performance, rural has been better. So I think these have been the responses for us.
Yeah, and sir, the MD of a company, Miss Jyothy, we see less of her interviews on the business channels, and she's very less appeared. Any specific reason for that? Means because she has taken the newly charge in the company in the past 1.5 years. So any specific reason for that?
So see, I think she was on ET Now last week itself. I don't know whether you were able to catch hold of that event or not. But I'll just, Mr. Kamath, if he wants to add something. So if she's being there, I think we'll let you know next time when she's coming on any of these media channels.
Thank you, sir. And sir, my last question is, in the last year annual report of FY20 on page 144, I was doing the analysis, and there's a contingent liability of close to 120 crores appears on your balance in your annual report. Can you throw some light on that? Means how you're going to came down this contingent liability of 120 CR, which is showing in your annual report?
Yeah.
Going forward.
Yeah. So this is out of that 80 odd crores is the corporate loan, corporate guarantee which was given for loan given to a subsidiary. So that is more or less the major portion of that.
Okay, done. Thank you, sir. Thanks for answering, and all the best. Thank you.
Thank you. The next question is from the line of Kaustubh Pawaskar from Sharekhan. Please go ahead.
Yeah. Good evening, sir. Thanks for giving me the opportunity, and congrats for good set of numbers. So just I have two questions. First, on your new launch, that is X Biofresh. Why it has been launched only in Kerala? Because most of your competitors have launched it, pan India, and their products, considering whatever the opportunity currently it is there in the market, or your thought process is like, since you have a better distribution reach or presence in Kerala, you would like to first try the product in that particular state and then expand into the other markets.
Hello. Hello.
Yeah.
Yeah. The thing is, yes, EXO is a strong brand for us, and we have always followed that path, that we launch first in Kerala, and we see how the results are, and then we go the next step. And for this also, we have done the same way. We will be, as in we have launched it there. We will be doing our investments. We see how the trends are, and then we take the next step. That's how we have been, and that's how we will be following.
Right, but is this launch an opportunity, launch, or something like you want to continue into your portfolio? Whether the demand for such kind of products will continue in the post-pandemic era, or something over the period of time, such products will, again, the demand for such products won't be there.
Yeah. So that's also one reason which we need to, see going forward. That's why we are taking that calculated steps. But for this product and like other products, those that are born out of, COVID, necessity, this one looks like will stick long term, because it's not just the virus that you're concerned about. There was a need for this kind of product in the past as well, because on the fruits and vegetables, if you see, the consumers did have a fear of pesticides being used, and otherwise germs, and also the wax that is coated on fruits for the shine. So all of those, whether it used to get really washed away in water by mere just washing, was always a point, especially also in the monsoon seasons where contamination and all of those happen. So it was only a matter of time, I think, this virus gave, this product as such was born, the need for this kind of product. Looks like after the virus also, people who are used to, hygiene, and who give importance to hygiene and have got such things home, maybe would continue. While other categories, yes, only time will tell as the virus goes, and, whether those will continue. But for a veggie and fruit cleaner, looks like it should remain. Hello?
I hope that has clarified your question, sir. Hello?
Hello. Yeah, my first question has been clarified. My second question is on your low unit pack. So what is the contribution currently of your low unit packs, and whether it has improved, in past few quarters?
Yeah. So overall, across brands, across the portfolio, we would say we are around 25 to 30% on the low unit packs of 5 rupee, 10 rupee, and 100 grams. It is improving marginally. Yes.
Okay. Thank you.
Thank you. The next question is from the line of Shirish Pardesi from Centrum Broking. Please go ahead.
Yeah. Hi, good evening, everyone, and thanks for the opportunity. Sanjay, hearty congratulations to you for smarter recovery in this quarter. I've got few questions. The first question is on the fabric care. We are seeing the competition is heating up and regional competition is also coming back very strongly. And of course, there was a period where input material was quite benign. Would you be able to help me understand how the competitive scenario is evolving in your stronger states like Kerala or say South India?
Yeah. So, most of the states, if you're looking at only for the fabric care, the issues have been, yes, the people are confined to home, so there's been a decline in consumption to begin with. But now things are now getting back to normal, and things are barring only the channel issues, everything seems to be fine. But in terms of Kerala, we are seeing decent growth, not anything abnormally high or any decline. And Kerala has always been our strong market, and we continue to focus on that.
Yeah. So I was more interested in how your growth IDD versus Henko.
So IDD and Henko both have done well in Kerala and in the general trade market.
So if you can give us some color on volume value growth, how it has performed in the quarter which is gone by.
So you can, it is again, if we are only talking about the general trade, it has done, both of them are focus, and IDD and Henko have done better than what we were doing in the previous years.
Okay. I also wanted to understand, you have mentioned that there is a focus on Maxo brand, and Maxo gel is one of the key interventions you have taken. Tell me the purpose of this and what is it that one can make out? Because we also have some strong brand like Prill, and now you're also trying to expand the Maxo franchise with gel. So what is the thought behind, and what can be the opportunity next 2-3 years?
First of all, one correction. It's not Maxo Gel. It is Exo. Exo is in dishwash. And Exo, we were quite, as a brand, very strong on the dishwash bar segment. We now that we are seeing good growth happening on the liquid side as well. We did launch Exo Gel sometime in the past, and that it's a thicker gel that is there for a value conscious consumer, and that is the offering that is coming from gel from Exo. And also Exo stands for antibacterial, which is a germ kill product as well, and precisely what is the current need of the market, that's what we are offering. And Exo is quite a known brand in the dishwash category, and we have only leveraged that brand to the next level.
Yeah, thank you, Jyothy, for correcting me. I was talking about. So I was more interested in knowing who's the target audience, or is it again going to be a South India focus where penetration of hand wash and dishwash segment is much higher?
So yes, like our thing is to go for South. That's where the brand is relatively known, and also the liquid usage is much more in the South compared to the rest of the country. Exo is a known brand, so and it operates in the antibacterial segment, and that's the reason we have launched it in the South. Sorry, and the other question was?
No, I'm saying which is the target audience. So is it that Maxo?
It's not Maxo, it's Exo.
Exo.
Yeah.
Are you saying that from bar to liquid is the transition which you are looking?
Yes. Bar to liquid, and so why precisely people never used to come to liquid is the whole thing that liquid is expensive. Also, the maids using liquid and a lot of wastage happening. So it is for a value seeking consumer where this one bottle of liquid would last them for over a month, more than a month rather. The gel is quite thick in consistency and it does multiple plates compared to your ordinary liquid that's there in the market. So that's the thing. So it's upgrading bar users to liquid.
Related on follow-up on that, what kind of margin difference you would have between bar and gel?
Both of them have average company margins, so not anything different.
Okay. My last question on the distribution, and you did speak about general trade. So could you throw some light in terms of what is the distribution expansion which we have undertaken, or maybe any benchmark you want to say over next 6 months or a year? And what kind of activities we are now doing? I mean, of course, from the presentation I can read there is van coverage, but any quantitative numbers you can share on the coverage?
Sir, I think there's nothing different what we have done. I think it's doing the same thing with far more sharper focus in terms of, as I said earlier, we focusing more with the help of data analytics and technology. So the same salesman, when he's doing one beat, if we can improve his productive calls by 10%, I think that's a great achievement for us. So we have been more focusing on improving the productive calls. We've been more focused on selling more lines in the same shop. So that is something which we are focusing and for the last couple of quarters, and we continue to improve that. Similarly, in the rural, these van coverage and adding sub-stockists, all these gives incremental gains. There are no specific targets, we would say, but it's more of a continuous focus. Each of the sales zones have it in now and for going forward.
What is the current rural village coverage we have, Sanjay?
So we cover all populations above 10,000 for now.
Okay. And just one follow-up. We have seen a wholesale channel had been very, very volatile. Any color on that, how this channel is now? Is the channel back or it still has some issues?
So wholesale has been better from what one had seen in the first quarter, April, May, June. It still has to come back, like the Bombay Masjid Bandar and all, but it is doing much better than what it was in the last quarter.
Okay. Thank you and all the best.
Thank you, sir.
Thank you. The next question is from the line of Tejas Shah from Spark Capital. Please go ahead.
Hi team. Thanks for the opportunity and congrats on a robust recovery. My first question pertains to HHI. What will be the gross margin difference between coil and liquids? And hello?
Yeah, we can hear you, sir.
Yeah, no, I'm saying what will be the gross margin difference between coils and liquids in HHI?
Yeah, so coil has been on the lower side. Liquids have been more than the company average gross margins, and that is where we will leave it at. And going forward, once on an overall basis, once liquid share improves, as you said earlier, the overall gross margins or the EBIT will be in the positive range.
And in our path to profitability, at what contribution that number will be achieved? Is it 60, 70?
So it is not 60, 70, as I said earlier. Even now also we are profitable, but it's a function of once the brand becomes of much larger scale in liquid vaporizers, the brand will, the overall portfolio will be profitable.
Okay. No, the reason, Sanjay, I'm asking this question is that it's since you started sharing this data from FY16 onwards, the highest margin that you would have touched on annual basis is 3.6 for the category. And then last 6 quarters, despite decent growth, it has been loss-making proposition. So apart from just the financial capital allocation, managerial bandwidth is also going in a category where we are not seeing or we are seeing subpar profitability. So from that perspective, it's actually management's call. But if the growth is not delivering profitability, then perhaps we are chasing a mirage here. That's just a suggestion because we have been discussing this for the last 3-4 years now. Just a follow-up on this, on a bookkeeping question actually. How much debt is there on the balance sheet as in September?
So on a standalone basis, it's a net cash position of around 30 crores, and on a consolidated basis, the net debt is around 40 crores.
Okay. And there are two line items in our balance sheet, other financial liabilities and other current financial liabilities, which are in tune of 60 crores and 40 crores. That pertains to?
So, other financial liability, what you're referring, we can always discuss it offline, but there was a new addition of lease liabilities which were to be accounted for. So that comprises majority of it.
Okay, fair enough. That's it from my side, and all the best to the team.
Thank you.
Thank you. The next question is from the line of Gaurav Chokani from Axis Capital. Please go ahead.
Thank you for giving the opportunity, sir, and congratulations on the good set of numbers. So my first question is with regard to what would be the contribution of the new products, that have been launched, like the hand washes, the toilet cleaners, and the other products.
So, all these new launches which we have done, like for an XO, becoming an XO Ginger as a portfolio. So we try to get, each of our portfolios to a newer format in which the consumers would prefer. And incrementally, we believe that every quarter we do 1 or 2 launches so that the entire brand becomes more stronger. And good 2 to 3% we try to see we get it from any of the new launches.
Okay. And so amongst these new launches that you have done, I believe the sanitizer sales would have come off, with the things now becoming back to normal. But how has been the experience with hand washes, and what kind of sales contribution do you see going ahead from this product?
Sanitizers and all are smaller contributions. We had launched it because we believed, Margo, which is antibacterial and meat-based, we thought it's... So these are not, we are not focusing on very large numbers, but again, they complete the entire brand strength. So like XO Bio Vegetable Cleaner, which I said, launching it under XO is basically to give a complete offering of healthy life to our consumers. So we launch it keeping a long term in mind rather than just seeing a short term trend in any of the launches what we have.
Sure, sir. So hence I am asking, your vision being a long term one, what kind of sales you expect from these kind of launches, maybe 2 years, 3 or 4 years down the road?
Sorry, sir, I couldn't get your question.
So I mean, like the hand washes is now being a good category, and it seems the most sustainable one. So what kind of sales contribution do you expect, from this kind of product?
Hand sanitizers, hand wash, face wash, these are, we generally launch it in one part of India in one geography and then we extend it. So they, on a lower base number, yes, the growth will be much higher, but it will take a couple of years to, be a, numbers when we can report it to you.
Awesome. And so one last question from my end is that we have seen, the fabric care like the Henko and the other products having a higher salience for the modern trade as such, and hence the performance being impacted this quarter. But now some of it is being covered by the GT channel. So do you think the growth rates can accelerate once these modern trade and these channels come back to normalization levels?
Yeah, absolutely right, sir.
So what kind of growth then in that case we can expect from this category in that case?
So I think in the past, fabric care has seen a high single digit and growth and touching to double digit, and we would expect once all this pandemic and supply chain issues resolve, the channel issues, we should definitely come back to the same growth.
And sir, one more, just if I can speak one more. on the ad spend bit. Sir, what would you like to give any guidance of, what kind of ad spends the percentage of sales are you looking for this year and the next year?
So in Q1, we did more tactical spends on news channel and digital media. In Q2, since the business has become more or less normal, we have been investing behind our brands and we've seen good results. For the next half year, we will see increased investments on media spends across our brand portfolios, keeping in line where we see the potential and, also keeping in mind the overall EBITDA, what we need to maintain. So you will definitely see increased investments on media spends.
Any number that you would like to guide for the year as to the percentage of sales?
No, sir, I think it's again a moving target in that manner where we see we will find a better investment and return. We will do it in that state and on that brand. But overall, yes, we will keep our EBITDA margins in north of 15 to 16%.
So the last bookkeeping question on the tax rate bit. The average tax rate, for the first half has been around 17.5%, 18%. So what kind of tax rate would be there for the full year FY21 22?
So we can keep the same tax rate for 21-22 as well, 17-18%.
Sure. That's all from me. Thank you.
Thank you. The next question is from the line of Manoj Menon from ICICI Securities. Please go ahead.
Hi, Jyothy, Ullas, and Sanjay. I have a couple of questions actually. When I think about the next 12, 18, 24 months for you, going by the trends what we are seeing currently, if I adjust for the detergents or rather the fabric care, decline, the rest of the portfolio has probably grown something like 16, 17%, if that's what my math suggests actually, which is an extremely good performance. So when I think about, the outlook 6 months or 12 months from today, once things normalize from a consumer behavior point of view, is it fair to assume that once the fabric care gets back to normal, trajectory of growth, the rest of the portfolio, may or may not grow, and then we will actually have a situation where, 1 plus 1 is actually equal to 3. So that's one question actually. The second, one insight which I would want to, understand from you is any statistic which you have in the last 6 months on, how the household penetration improvement for some of your categories, because that essentially would give a lead indicator for what's likely to happen in FY22.
So, the first part of it, yes, Manoj, currently if we exclude the fabric care, yes, the overall growth will be higher. But, we have all the brands, so it's not fair to just exclude one brand and then only talk about it. Yes, we believe for all the other categories, the growth is going to be sustainable. And for fabric care, leaving or hoping that modern trade and CSD also comes back around, we should have a decent growth in fabric care, and which leading to the overall better growth. But in spite of fabric care not doing well to our expectations, it's still a good all-round performance what we have been able to get. To your second question on household penetration, yes, if rural low unit packs have been growing, so household penetration is improving there. And e-commerce has been again there is a strong acceleration in e-commerce activities, and not only in the urban, but we all read even the tier 2, tier 3 cities also e-commerce companies have been doing very well. So all in all, we don't have a specific data to share with you given the current environment, but yes, household penetration and spending sentiments of consumers has improved across many of the categories.
Sure. Thank you, and all the best.
Thank you. The next question is from the line of Ankit Babel from Shubham Ventures. Please go ahead.
Good evening, sir. A couple of questions. Sir, my first question is the reason for the fall in margins in your personal care segment, in spite of growth in sales. So what is the reason for it, and where do you see the margins sustaining, say maybe next year?
Yeah, so Ankit, personal care EBIT margins have come down primarily because of higher raw material prices of PFAD and PKFAD, which is the key raw material for manufacturing of soaps. So we currently seeing the same levels, or maybe marginally increase in the raw material prices, and we see that's the key reason for decline in the EBIT margins marginally in the personal care.
So you have not taken any price hikes to compensate that?
No, not as of now.
Any plans for the same? To go back to your 30% margin?
No, I think whatever we are making is also decent numbers. So for now, there are no plans to increase any prices there.
Okay. So my second question is that, when we analyze the results of other companies and when we talk to the management of those companies, but we feel that most of the companies have utilized this opportunity to reset their cost basis, right from advertisements to overheads to other fixed costs and everything. And, some companies have been guiding for 1 to 2% kind of structural saving in cost as a percentage to sales. But when I analyze the numbers of Jyothy, now in most of your line items, be it employee, be it advertisement, or be it even the other expenses, everything is up YOY. So, I mean, aren't we doing anything to reduce our cost base or, to structurally, have some profitability gain?
Yeah. So if you look at for half year, revenue is up by 4.5%, while our EBITDA has increased by 13.6%. So as you rightly said, we may have increased, our employee costs may have marginally gone up and our media spends have gone up, but those we think they are good costs. And we would not believe to cut down on the good cost. Yes, we need to bring down or improve efficiencies in a manufacturing thing and overall supply chain, which we have done. And if we see a gross margin improvement, is because of that. So we are happy investing behind the brands and keeping the employee morale also good.
So just a follow-up on this then, in one of the interviews, Mr. Kamath mentioned that for FMCG companies, once they reach a certain margin level, they don't go below that going forward. So suppose if this year we end at around, though you have been guiding for 15-16%, but if I take a realistic thing, I believe you can end at even 16.5 to 17%. So going by Mr. Kamath's view, can I assume that for Jyothy now this 16.5 to 17% could be a new normal going forward? Once if you achieve that number in FY21?
So yes, it is good always to improve your past performance, and which is what we will definitely aim for. But as I said, we also need to invest behind our brands. So if there is a 1% here and there, we will take it again as a good cost and continue in that direction to give a better, higher volume growth, a better market share gain for each of our brands. So our focus will be on market share gains, then only leaving 50 bips or 100 bips EBITDA expansion every month or every quarter.
Okay, sir. Great. Thanks and all the best.
Thanks.
Thank you. The next question is from the line of Kunal Satam from QRC Investment Advisors. Please go ahead. Kunal, your line is in talk mode. You can go ahead, please. We would request you to please unmute yourself if muted from the handset. As there is no response from the current participant,